I'm Alan Kenny, Editorial Director with REIT.com, and joining me at the NAREIT headquarters in Washington, D.C. is Keven Lindemann, Director with SNL Real Estate, to talk about the first quarter of 2013 for REIT stocks. Keven, how are REIT shares looking given everything that's going on?
Well, the sector has performed fairly well this year. I think there may be some concern that valuations are getting a little bit rich in the sector. If you look at NAVs, the sector, the entire REIT stock universe in the U.S. is trading at about a 14% premium, and that's certainly towards the higher end of what we typically see. In terms of price to FFO multiples, that's also at the higher end, sort of in the mid-teens. So, I think that there is some reason for concern, but earnings growth continues to be reasonably strong, and the companies tend to have very clean balance sheets. So, if the economy continues to recover, I think the outlook is still very positive.
2011, there were 8 REIT IPOs. 2012, 8 REIT IPOs again. We've already had 6 in the first quarter of 2013. Is that an anomaly, or is that a trend that's going to hold up?
I would say it's a very encouraging sign, and we could certainly see a lot more activity out there.
And REITs raised a record amount of capital in 2012. Are we going to see that same kind of pace set in 2013?
We have certainly seen that pace continue. It's been fairly balanced between unsecured debt, preferreds, and common shares. Common shares is actually up year to date over last year at the same time period. So the companies continue to have very ready access to the capital markets, which I think is also very encouraging for them. A lot of companies continue to take advantage of at-the-market offerings so that equity is raised over time at advantageous prices to the companies. I think as long as company share prices remain high, companies are going to be very interested in issuing equity, and if there is investor demand for it, they'll continue to do it and continue this deleveraging that we've seen. It will all hinge on investor demand. If the institutions continue to want those REIT stocks, I think the companies will continue to raise capital at this pace. Eventually, we're going to see, I think, institutions start asking more about the use of proceeds and making sure that they're getting a good return on this. But there doesn't seem to be any sign that capital raising is slowing down at all.
All right. Well, thank you for joining us, Keven.
My pleasure.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.